And a delight for me to welcome on the webinar tonight, Jacqueline Moulen, who I'm very happy to say we have a catchphrase for you, Jacqueline, on our shows when you join us once a month. It's Mullen on mortgages, everybody. So we're going to work that up into a full-scale jingle for your arrival. Welcome to the webinar tonight. Thanks for being with us.
Thank you very much, Carl, for your nice introduction. And I'm happy I have a new slogan going with my name and what we do. So yeah, we're here to talk about mortgages. Thanks everyone for joining and for being here. And hopefully I can shed some light on this daunting subject of how to get a mortgage in Portugal.
Well, it can seem like that because I think at the best of times it's quite a stressful process potentially, isn't it? And then you're doing it in another country here as well with the added complications there. I think you can ease those stresses. And already you're being asked, are you situated in the Netherlands? I think somebody may have picked up on your accent there, which I think you'll tell us about now. When you tell us about yourself first and a little bit about the company, if you will, please.
Yeah, so very well noted. I am Dutch. I'm from Netherlands. I used to live in Brazil and Spain and Portugal a little bit too. So I do speak all those languages somewhere in between and some English, as you might notice. But originally from the Netherlands, I ended up living in Spain about 6 years ago. And then I got to work with Mortgages Direct Spain. And because of my language ability of being able to communicate in Portuguese, you kind of added straight on Portugal to the equation, because that, was a market we weren't really exploring, but we did get a lot of people already asking, if we could help them there too. So there was a organic demand already existing, and we jumped on it, and we've been only growing ever since. And I think this was one of the best years so far, and it's only increasing each month with how much mortgage inquiries that we get. So yeah, it's definitely a popular something going on at the moment.
Superb. And you speak all those languages. And just a little bit of a personal angle here. You're a highly accomplished dancer as well, I hear.
I don't know. Highly accomplished may be debatable, but I did do 20 years of jazz, choballet, and all the ballroom dancing and the salsa dances. I've learned all of them, but that's kind of like as a consequence of, studying internationally and then meeting people from abroad. The dancing I started when I was 7. That was thanks to my mom and sister who really enjoyed, putting me up for shows and things like that. But it's just very much fun. And then through my international studies, I met people from everywhere. I got into the salsa, and in Brazil, they dance samba and all kinds of dances along next to it. And that was just a nice added bonus of living abroad and getting to know a little bit the local culture.
Superb. That sounds highly accomplished to me. Decades in all those different sorts of dances. And hopefully, forgive the cheesy link, but you'll be helping people dance towards their dream home here in Portugal with the appropriate finance. Okay, things are looking pretty good, it has to be said, with finance and mortgaging and interest rates. Could you give us a bit of an overview on that at the moment in Portugal?
So let's start with the basics. If you as a non-Portuguese taxpayer, let's take that as a starting point, you would have to bring to the table always 30% of own funds for the purchase, and you need around 7 to 10% for fees and taxes. Depending a little bit on the purchase price and on the area, you can have a little bit of variation there. But so keep in mind, like rule of thumb, if you have 40% of own funds, so that's what you always need in order to complete. And then when it comes down to how much can you afford, that really depends on the existing debts you already have. Your age is a factor too. How much do you want to borrow? Does that fit into the equation of what banks find acceptable? So as a very simple rule of thumb there, if on each 1,000 euros, I'm just going to keep it to euros, but if you earn another currency, not an issue, because we help people earning in US dollars or almost all currencies, basically we can help, maybe some exceptions there, but usually it's possible in Portugal. But yeah, so you on each 1,000 that you earn, you can spend 350. So 35% of your income can go to existing debts plus the new mortgage in Portugal. As a very simplified way to go about it.
This is why I love working with you and talking with you, because you're very straightforward about all these things. This is what you'll notice tonight, folks. Do get your questions in the chat. and I will weave in what we can from of a sort of global and universal sort of point of view that will be of benefit to everybody. And then we'll go to more of a personal hands-up Q&A after the recording is over. We've got greetings from Colorado tonight, fantastic, and from Titchfield in England. Talk about meatloaf ever since the mention of the word this evening, and of course bat out of hell that goes with that. Yes, we do though enjoy meatloaf in America. Turkey is the #1 protein we serve for Thanksgiving, so that to look forward to, I think, for many people for the rest of the day today. So yes, do please get your questions into the chat about anything to do with mortgages in Portugal. We'll come back to that depending on age, because I think that's quite an interesting point, the maximum age and what can be done if people are approaching that. But we were chatting before we came on air about a great success story you've had recently, because some people are obviously crestfallen when their finance application is turned down. You can help people when they're in that condition.
Yeah, it really depends case per case basis, but I've had the clients who knocked on our door in August very distressed because they were turned down and they were certain that they would get an approval because that's what they have been told by the banks all the time. And then all of a sudden, when push came to shove, they were declined and they had to put down quite a large deposit, about 10%, I think, and they were just, in total distress about getting a mortgage, or that they couldn't get it anymore. And then I had a look at their finances. They were Dutch applicants as well. So it helps that, of course, I can read them easily and translate that back. Although we see a lot of tax returns from like the US or the UK. So we're very comfortable with the format of foreign tax returns, which is important. And I could identify some debts that were not well understood by the other Portuguese bank. And there were some outgoings additionally that were they were registered as private, where they were company outgoings and things like that. And then I had a talk with the clients. They could get a mortgage approved, and 20 days from now they're going to have their property in Portugal. The reason the actual proof for the mortgage came through in less than 3 weeks through the bank that we introduced them to, but then the vendor pulled from the deal despite having a mortgage in place. So that's why it took longer to find a new property. But I felt much more comfortable for them because they already knew, like, okay, we have the mortgage now in place and we can actually proceed and, put the money down and have our home. So yeah.
Oh, there's an interesting point there. Well, I mean, congratulations on that. So it's not necessarily over if people have been knocked back, but you can pre-approve as well. Then you don't have to wait until somebody's got a specific property. You can organize in principle lending, can you? Yeah. It's
like you cannot get official documents, but we can get commitment from the bank saying this looks good. Here is some rates that we can quote you, the conditions to that mortgage. Yeah, you can get all that feedback and feel comfortable putting down the deposit.
Excellent. Questions coming in. That's great. Thank you, everybody. First, we'll kick off with Michael. In the US, credit score is hugely important for all types of lending. Does that come into play? And if so, from which sources? Yeah, how would that be assessed by a Portuguese bank, the credit score, if necessary, of somebody living abroad?
They always ask for the credit report of your home country. So you have to understand the banks, for them, you're a completely new risk and you bring in income from another tax reality. So it's a riskier operation for them who's someone who is actually in Portugal, because then they have, they can do all those checks in their own systems. Yeah. So it really is, dependent on the client that you deliver all these documents. And they do ask for independent credit reports, like from Experian or Equifax or any independent credit institution operating in your country.
Very good. Okay, thank you for that, Michael. Hope that suffices with your inquiry there. Just anything that remains unanswered for you or anybody else, pop that in the chat. Janet, thank you for this. How do they assess income if you are no longer working but have retirement account from which you're withdrawing the money? Is that possible, or do people have to be working?
No, you can. You can also any income that you can identify in your bank account tax returns. So tax returns is quite essential here. That's the key word. Doesn't mean that it's not in your tax return. They cannot include it, but we have to have some form of taxable, identifiable income. What is more a factor if you're in retirement is age. Keep in mind that the maximum age to have the mortgage repaid in Portugal is by the age of 75. Yeah. So you would, when we talk about retirement, maybe you want an early retirement, but that's something to factor in.
Okay, good to know. And there is a workaround, isn't there? You say, did you say 75?
75 is the age where you would have to have repaid the mortgage, but I did have a case which I mentioned in one of the podcasts that we did, where there was a couple and one of them was actually younger. And then we could, although the partner wasn't the main income earner, we could still base the term on the partner, because the retirement income was stated that would go to the partner in case of death. So
Right.
then they'll have the long term and make it affordable and make it workable, because that's important too, because when you do hit a certain age and then the mortgage would only be possible 5, 7, 10 years, maybe the payments become too high also for you comfortably to repay, but also in terms of what the bank finds acceptable. So if you can make that extension in the term, you can have, again, a positive for a mortgage versus a decline. So that's quite relevant.
Good to know. Thank you very much for that. We see from your graphics there, I think Zoom is squeezing you in a way that's losing out on some of your information. But there's the email address for Jacqueline, if you need it, jm@mortgagedirectsl. Don't forget the sl.com. And obviously that's the place to look at the website as well, mortgagedirectsl.com. Sanford in Seoul. Wow, career tonight. I understand that banks will do their own survey of a property, and will not loan more than 70% of their evaluation. Is that correct? So is it the bank that's organising the survey? How are you seeing that, Jacqueline?
Yeah, you're right. Sanford.
Yep,
yeah,
Sanford.
You're right. The banks always execute their own survey, and the cost for it around 200, 300 euros max. But they will base it on that. It doesn't mean that in some cases where the survey would come down like a little bit below what was asked for, they might still adhere or honor the original asking price. But if the discrepancy is too big, then they would go with that lower value for sure.
Okay, thank you very much. There you go, Sanford. And Mio now, MIO, when I asked for a mortgage, I had to give an employer statement mentioning that I was allowed to work and live in Portugal. That's interesting, and still work for them. Is this standard, a kind of reference from the employer?
And so in this case, you were already working in Portugal and they were asking for a letter that your employer stated that you were on a contract with them. Right.
Yeah, I guess allowed to work and live in Portugal, because I guess that would come to if you're not allowed suddenly to work in Portugal, or your permit didn't allow it, or the work contract didn't allow it, that would mean an end to the income, wouldn't it?
Yeah. So it's quite it sounds like there's a little bit of a legal thing below that. So I would have to know what would be your original what is your, where you're born, what's your passport saying? Yeah. But yeah.
Sounds a bit unusual. It sounds like it's not standard, which was the end of the question there. Yeah, okay. All right. And a rainy Sydney. Albie's tuned in from a rainy Sydney tonight. Good evening to you, Albie. Jeff, we've just received our planning permission. Well done. Congratulations. We have a bank account with CGD Bank here in Portugal. Caixa General, I think. Does Jacqueline deal with them for mortgages? So if you've got an account with them, are you preferring there, Jeff, to have Jacqueline approach them to see if she can get a better deal than you can? Could that work, that you would work for somebody who already has a bank account with the bank?
Yeah, we can. I mean, I've helped people already have a bank account set up with a bank, but that if they have it with that bank, doesn't mean that I would for some reason take them to that bank because of the conditions the bank is offering, or also because of the acceptance rules, or just looking for the best offer. That's what we aim for. So we always look at what's in the client's interest, like what does serve you, and where do you get the best rates, where you're going to get the approval versus another one, which the example I just mentioned at the start, they were going to the bank directly without our interference. It's a bank we work with a lot too. Yeah. But somehow they misunderstood their profile, and when we took it to the other bank, we got the approval. So that's quite relevant, and we also got some better conditions still. And
yeah, so it's best deal first.
Yeah.
Go for, rather than a particular bank. I mean, Jeff would like you to approach his own bank there, by the sound of it, from what we're seeing in the chat. But you're going to be looking for the best deal first, rather than approach somebody's bank in particular.
Yeah.
Yep. Okay. Thank you very much, Jacqueline, for that. Marshall, what is the average down payment in percentage terms? It was 30, wasn't it? 30%?
Exactly. Yeah.
Exactly. Okay. And buy-to-let mortgages. Good evening, Richard. Hi, everyone. Happy Thanksgiving. Can you arrange buy-to-let mortgages, please, Jacqueline?
They don't exist in Portugal as they do in the UK. So in the UK, that's a very specific product that you have designed for that, but such a mortgage just doesn't exist in Portugal. So it's only one type of it. It's residential crédito habitação, as they call it. So residential mortgage properties. And if you would rent it out after the mortgage has been signed, it doesn't have any implications because, yeah, simply said, there is no different product for it.
Interesting. So but does that mean that Portugal is quite a traditional place in terms of banking products and the financial industry?
I would say so, yeah, in many ways. I think like this is something that we get back a lot, like because people tend to look, which logical, they look at the home reality when they source the mortgage in their home country, and then they compare it to Portugal and they feel, oh, it's very traditional. In some ways, it actually is, but in some ways, most home countries, the UK, I know, for example, the Netherlands too, I think Germany even too, you couldn't get a mortgage if your income is declared not in the home country. So in the UK, you cannot get a mortgage unless you are declaring taxes in the UK or you already have property possessions like a cash buyer. So it's quite, it has to do everything, of course, with the Portuguese reality where a lot of foreigners are interested in owning a home in Portugal. Yes. But so it's traditional in one sense, but in the other end, it's quite forward thinking that they are allowing non-tax residents to take out a mortgage.
That's good to know. Excellent. So traditionally in one sense, progressive in another. And a clarification on the 75 years of age limit. Jen wanting to clarify, if you're 65, you're going to get a 10-year mortgage, basically.
Yeah. If you would be the only applicant, then that would be the response. Yeah.
That's great. Okay, so along with buy-to-let mortgages, we will pose Jerry's excellent question, which is even if you've got the full finance, is it worth looking at taking on a mortgage? But along with that, another kind of mortgage, the equity release, that's also not a thing here in Portugal, is it? If anyone was interested in that, you can't raise on what you've already got here.
Only if the intention is to do remodeling on your existing home, but it's not so easy. So if you're considering buying and then would want to do with the intention, well, I want to buy it now because, I need to close this deal today and then I want to get the mortgage in place, then I don't recommend I always recommend, let's see if you can extend the date for the purchase to happen and have the mortgage before you sign anything. Because afterwards, it's just not easy.
Okay, good to know. Is it only possible, Ignace is asking, to get a mortgage through local Portuguese banks or also through non-Portuguese banks that have offices in Portugal? Great question. So will it only be the progressive Portuguese banks that want to lend here, or can you get finance through non-Portuguese lending institutions?
We work mainly with Portuguese lending institutions. We have some, how we call them, big investment companies, so they're or investment banks. But we're talking about like substantially higher mortgage amounts, like everything 500,000 and up, that kind of area. But if you find a bank outside of Portugal willing to finance, in my experience or in our experience in general, is that banks like to finance on the territory that they're operating. So they don't like to take out for all kinds of legal consequences that has. But then you have specific cases with investment banks where they really look only at what is your asset portfolio, what kind of income streams do you have, and then they're willing to finance wherever you're going to buy.
Okay, good to know as well. This is brilliant tonight. Thanks for all these questions that are coming in. Mio, to clarify on the work contract question that was going on before, Mio is working for a Dutch company in Portugal who want it sounded like the lenders want the proof that work contract will continue. Maybe that's from one Dutch person to another there. Email Jacqueline on jm@mortgagedirect.sl.com, or we can come back to that in the hands up in a little while. Lilibeth, great question as well. Is it a requirement for you to make the home you are purchasing with a mortgage your primary residence? Or can it be used as a second/vacation home or income generating home, which is a little bit like buy to let? So how would that work? Have you got to live in it?
Yeah, of course. We have, I think the majority of our clients use it as a second home.
Okay.
It's the primary residence is, they call it, there's one type of mortgage, which is for residential purpose. But if you're going to rent it out afterwards, there's not really questions asked by the banks. There's no check-in. They really care if you pay the mortgage back. That's the main concern.
So when we said there wasn't a buy to let, I mean, in a sense that it's not a particular product, but you could take out the sort of mortgage you're talking about and then let it out.
Exactly. Yeah.
Okay. That might have changed Richard's mood from
Sorry.
the question.
Yeah.
That's fine.
Let it out. You can, Richard.
Oh,
But
good to
it's
know.
just that we don't. There's only one type of mortgage in Portugal: repayment mortgage, or maybe a construction mortgage,
Yes.
commercial lending. But that's not the thing we're talking about now a lot. But yeah, you can let it out. It's just that the mortgage product doesn't look any different from having a holiday or a second residence or first residence type of objective.
Interesting. Okay. And yeah, while we're on the subject, the types of mortgage, interest only. That's also very 80s, isn't it? Not something that exists in Portugal.
Exactly. Yeah. No.
Yeah, it's kind of risky, isn't it? That sort of product that seemed ever so popular in the 80s and 90s. Sanford says, I'm 10 years away from retirement, hopefully in Portugal. We hope so too. Can I purchase a property and continue to live, work abroad? Do you have to be here?
No.
There you go, Sanford.
95% of our buyers are not living in Portugal.
How many?
A holiday home. Yeah.
How many was that?
I think 95%. I would have to do an exact.
Oh, really? Wow. Okay.
We have some resident people and coming through as well now for mortgages, but it's not the majority of our business. For sure not. Most people are holiday home buyers or second residences, and
very interesting.
Usually don't spend the majority of the year in Portugal.
Okay, I can hear people's minds at work now. They're going to be maybe spreading their asset base cash-wise across 2 properties. The first one and maybe a second to take advantage of that and join that that typical clientele of yours. Elizabeth, my question just got answered. Thank you. That's great. Can you asks Adam? Can you please clarify the 1,000 to 350 ratio that you mentioned before there, Jacqueline?
Sorry, the one. Oh,
every thousands of earnings. Go on.
So when we were in the podcast this week, we talked about a property of 155,000. So
yes, and then illustration. Perfect.
I can walk through that, and then maybe it clarifies a little bit.
Great idea.
So let's say 150,000 is your purchasing price, because that was a property that your friend Carlos was his name, I think. He got
Vitor Costa, our man in the north, he proudly showed us a beautiful home, a T4, everybody, for 155,000 with a beautiful view up there in Viana do Castelo. It was superb. Look at Tuesday's rerun to see that beautiful property. It's probably already sold after that, but go on, Jacqueline, 150K.
We're going to still go with that. So 155,000 was a purchase price, which means that from the bank, you could get 108,500. For simplicity, let's say you're going to pay it over 20 years. Depending on your profile desires, that could be different. But if we take 20 years and borrowing 108,500, you are looking at a repayment of 500 almost, or a little bit below that, but just keep it simple. Then I'm going to add our imaginary customer spends 800 on the existing mortgages, and they have 3,500 euros in income. If I add the 800 plus the 500 for the new mortgage in Portugal for a lovely property up in the north, and then you're going to reach 36% debt to income ratio, or effort ratio, as they call it, meaning that you've just hit, the acceptance of what they find acceptable. If I'm going to make that a 25-year term, then that ratio turns into 34%. So you're within what they find an acceptable ratio.
Okay.
So that's just as a very simple way to start. So I'm adding 800 plus 500 gives me a total of 1,300 expenses a month. And then if I divide it over 3,500 income, I either get to 34 or 37. Okay.
Got it. Okay. So that's a way of managing the risk for the bank, seeing what your current exposure is and adding it to the lending that you're about to take up with them.
And in that 35%, we only have to fit in any loans that you have or any rent that you pay. All the other expenses, utility bills, whatever, we can just leave that aside, because they just say you need 65% of your income for living, basically.
Yes.
That's the very simple equation. So no more than 35% of your monthly income can be tied into any obligations in forms of debts or rent.
People might be doing mental arithmetic at the moment to see if that 3565 applies to
I
them.
made it as simple as possible, but that's why, if you have any questions specifically, just reach out to me, or someone of my team will, go through with you personally, like how can we work it out? Because the example, not to repeat all the time, but the one I gave at the beginning, that client was turned down by another bank, by the first bank they went to themselves, because they didn't have a good grasp on that situation of outgoings and incomes, and they didn't account for certain incomes. They did account for certain credits. One credit was going to be paid off within X amount of time, then we could take it out of the equation. Well, there's all kinds of, puzzling that was going on in order to make it work. But if you can better, communicate it to the bank, they can also better understand, and then you all of a sudden have an approval versus a decline.
Well, this is it for the mortgage muggles, isn't it? I mean, if you don't know, they're not the dark arts, obviously, but if you don't know about the magic of mortgages, you are a mortgage muggle, and you're not available with, so you don't know what's going on behind the scenes, and you need someone like Jacqueline working for you to give that a second look. Did you like the Harry Potter analogy there?
I love it. Yeah.
Okay, great. What are the rates for mortgages at the moment, say for 5 or 10 year fixed mortgages? And do you see them changing in the coming years? Crystal ball time, Jacqueline, please.
These are so, there's things happening in the world that can overnight make mortgage rates jump up.
Yeah.
That's usually the direction that we don't like. For example, Brexit, it creates financial insecurity across the markets. The election of Donald Trump some years ago creates some insecurity. Over the 6 years that I've been doing it, so I can only look back and then give you a bit of an estimated guess on that. So based on that, I've not seen crazy jumps in the mortgage rates in Portugal. We've seen some favorable developments where, for example, if you're going to buy a property which has a good energy rating, you can get a little bit of a discount additionally on the rate. So instead of, I have to come back to what kind of rate could we offer through the bank as well. If you talk about variable, it would be something around 1.40% plus Euribor, and Euribor is the interbank lending rate, and they take it out in Portugal, meaning that they're going to add it or take it off, and because it's negative for the past 6 years, as long as I've been doing this, it's going to be an effective rate of 0.9% because it's minus and a half. It's around that course. Mm-hmm. That's where it's been. Okay, so that's a variable rate mortgage. So when you talk about mortgages rates going up or down, with the variable ones, it really depends on the interbank lending climate, which is the panel of banks inside of Europe deciding what kind of rate they're going to lend to each other. Mm-hmm. And it has been negative for the past 6 years. Of course, we have a lot of things going on in the world, and there are always some talks about rates going up in the future. But I can only say that they have been really low for the last 6 years that I've been doing this, and they haven't jumped, not in crazy amounts jumped. But sometimes banks can offer you something really unattractive or slap on a lot of additional products, which most people don't ask or don't know about that exists. Oh. So I always, I take a broader perspective, not just looking at the interest rate.
Okay, thank you very much for that. And did you mention fixed rates?
Yeah. So variable. No, I didn't mention it. Also, good to remind me. The variable one is 1.40, as I said, and fixed rate could be somewhere around anywhere 1.4 up to 1.9 for a 10 years fixed rate. You could have it slightly above 2% if you're going over 10 years or 15 years, but we can still also get rates of 1.8%, 1.7% for 20 and 25-year terms. It also depends a little bit on the mortgage amounts, income profiles, everything kind of discussed already.
Okay. So relatively speaking, and this isn't financial advice, but it's quite a favorable time to be doing a deal.
I think if you look at what's available internationally in the markets, if you look at value for money that you can get in Portugal in terms of the properties, I think many people are very inclined to buy property and with a mortgage. And I think that ties into the other question,
yes,
why take a mortgage if you can buy cash? Yeah.
So let's do that. Let's approach that now then. Great question, Jerry. Somebody is coming over. They might have 200,000 and they've got their eye on properties of that kind and they're going to buy it outright, so they don't have to worry about that sort of thing. Might they give it a second look and think to themselves, okay, well, we could just finance this and put some of the surplus, well, not surplus, but put some of the cash instead of all into the home. Could we get a better deal somewhere else? Put it in a cryptocurrency or buy a second property or something like that. What would you say to that?
Yeah, this is a very personal decision. Let's start to begin with, and I'm not giving financial advice. It really depends on what you want. I mean, a simple point: if you, I think we say this in the Netherlands, like if you put your money in the house, you can't eat stones. You know, so it's there. Yeah, you can't eat them, and if you have money sitting in your bank account because you didn't use it for the, to buy in cash the property, you can use it for other sources, or you could invest it. And this is what we see a lot of people doing, that they rather use the money to invest it in other financial products, which give them a greater return than what the interest rate is costing them in Portugal.
So fascinating. It tells us a little bit about the Dutch, that, doesn't it? So if you put the money in the house, you can't eat the stones. But in Portugal, you can make soup out of the stones. I don't know if you know that.
No, I didn't.
Okay. So what are the main advantages to, this is a great question, Ed. What are the main advantages to buying in Portugal versus just leasing, renting? I think we'll deal with that in the second part of the call, because that's a really good question, but not so much to do with mortgages. We'll come back to that though as part of our discussion after. Mike, how do Portuguese banks approach mortgages for properties requiring renovation? Initial capital and lending for renovation works. Okay, yes. So the state of the house and the survey, I guess, comes into this, right, Jacqueline?
Yeah. So the initial survey, if the property, of course, that's really so case dependent. So I can just speak in very broad terms here, but the state of the property is going to turn a certain value. And if you would want to refurbish, again, said it's not an easy task. So I'd always recommend to see if you can get the highest amount out of the property purchase itself, but you would need to have official contracts and the licenses if it requires, outside walls of the building to be reconstructed. And getting those license plates can be a bit of a pickle, but you need some good legal advice there. That's not my part of the transaction. But can you finance it? Yes, but it is really dependent on the state of the property, because if it's kind of what you see in Portugal too, like a piece of agricultural land with a ruin, don't expect to get finance on that from the banks. First of all, it's not always, there's legal part of it. Like, is it meant to be living on, like with a residential property built? And second, what is the state of it? And if they feel if it's in a too worn down state, then the answer would probably be no. And that has also to do with the fact that if you're not a tax resident in Portugal, you're more likely to walk away from the project at any time, and then the bank has lent you money. So they feel it's more risky with someone who's actually going to, already lives in Portugal and is going to live there permanently.
Guys, I get it, and I'm sure everybody else here can as well. Some expats are looking at a field with some rocks in it and thinking, there is my dream home, just needs a little bit of work. The bank looks at it and goes, there's no way we can sell that on. So they're not going to lend on it. You got to see it from the bank's point of view on that, haven't you? So Mio, you missed out on your dream house because of the work contract thing. I think a conversation with Jacqueline's useful there, so you don't miss out on another one. Is there such a thing as a bridging loan in Portugal, for example, to remodel that ruin? Bridging loans, would they come into it, or is that again just not really part of the scene here?
Not with traditional banks, I wouldn't say so. It's not very common. I touched about it a little bit earlier with bigger investment banks or parties might be willing to look at that, but we're talking about very different interest rates too. So I think for most people, that's not something probably would not be the most advantage route to take.
And you'd have to be sort of pretty have an appetite for risk by the sound of it with those sorts of things, and be a bit of a financial player there. Okay, Larry and Sally, I think we answered your question there, but if not, do ask in the hands up session afterwards. And Marshall, good question. If I have a house, I can rent. So if I have a house, I can rent my place. Do I need to ask the lender for permission to do that, Jacqueline?
Well, no, like I said, there are no buy-to-let mortgages. There are no checks on that, what you're actually doing with the property. It's a bit of a gray area, to be honest. It's not something they really want to get the mortgage in place for either your second or primary residence or holiday home idea. But there's not really a control mechanism in place checking if you're renting out your property.
There you go, Marshall. Make of that what you will. Can you pay off your mortgage earlier without a fine? Yes. So that's a great question. Can you settle early, and what are the penalties if you do so?
You can, and there are penalties depending. With a variable rate mortgage, it's 0.5% of the amount redeemed. So with 10,000, you're paying a €50 fine. And with a fixed rate mortgages tend to be 2%.
Right. Okay. Straightforward answers. Loving this, Jacqueline. What is the most common delay? This is really good, Thea. What is the most common delay to the mortgage process in Portugal, and how can we work to avoid it and get through it relatively painlessly? Brilliant question.
Okay, I'm going to turn it around. I would say the average to get a mortgage in place is somewhere between 6 to 8 weeks, which I think is quite normal. The delay, well, at least when we're in the middle, the delay usually does not come from the mortgage, but it comes because we're dealing with a lot of third parties in this whole process. So we have the vendor, we have the buyer, of course, we have lawyers usually within between, we have to do the property valuation. And there's so many people involved that can delay potentially, but I wouldn't talk about what is an average delay because it's really case per case basis. And I don't think that the example, I'm just going to go back to it because I love that example. The mortgage was approved in less than 3 weeks. I think it was even 2 weeks, like super quick. We had a mortgage approval where they were turned down originally. And then the vendor decided to walk away from the deal. So then we got delayed by another 3 months, but nothing to do with the mortgage in itself. Okay.
Your fees, how does it work when people work with you? How do you make a living from this?
We do this for free. No. We do, in the sense that we are recognized by the Bank of Portugal, so we get banks commitment payments through as well for introducing clients. We do have, because of the niche that we operate in, we do have an additional service that we offer, but this is optional. This is not. So we can introduce you to the bank at no cost. If someone wants additional services that we offer as part of this procedure and getting everything in place, like translations and liaising with everyone else in the process, then we would charge a fee. But that's, as I said, it's optional, and we can discuss it when we're talking about getting your mortgage in place.
But you pay by the bank, not by the client. That's great. This is a serious question, but one worth asking. Janet, what if someone dies before the mortgage is paid off? Is there still a penalty? Banks wouldn't do that, would they?
To be honest, in the case of that, I would have to go through a contract right now and to come back to the question. Luckily, I've never had to.
Yeah, that's a good thing, isn't it?
No, yeah. It's a good one. So there's two things here going. So if in the case of that, and you would have the early repayment, I don't think there's a penalty, but I would have to really check one of the bank's, proposals or a few to be 100% certain with my answer. Some banks want you to take out life cover. Then of course, life cover will pay off the mortgage and there's no penalty there. But I don't think it's applicable. But I'm going to, take a rain check here and really dig through a mortgage document and see what the answer is, because
thank you for doing that. Yeah, thank you for that answer. There you go, Janet. So a couple then before we go to a more personal hands up session after the recording. But can you finance a prefabricated house? Are you getting lending on these sorts of properties? Like maybe a timber built thing that gets delivered and put on the site?
I've never had an application as such, so I've never had a question from a client. The main idea is, as long as that thing, the one that you're buying is, fixed in the ground and you cannot lift it, and because you have these tiny house concept, I don't know if it's very lively in Portugal, but these things are, you can transport them. And the whole point of the bank is I know where that property is fixed, so that's my security when you're not paying your mortgage. And if you can put it on a trailer and just drop it somewhere else, I lose full control of that option to reclaim my money if you're not paying the mortgage back.
Okay, I think Adam, you'll get the gist from that answer, whether or not you're going to get the finance. And I think we're talking, aren't we, about a proper home on a site that's not going to be moved in a tiny house style. But a great question, and you may well set the precedent with that, Adam. Can you speak more about pre-approval? Do you need to find a property before you secure a mortgage? What are the steps in order? Great question again from Sanford.
Yeah. So Sanford, there was also the question earlier, like, do we have fees? Like, the first thing that we do a no charges free check. Let's see if we can get a mortgage in place or not. So that's one. We're going to give you some feedback, yes or no. And if it's not an option, we won't even send you an offer or something, what we think is possible. Then step 2 would be to take your application to the bank and then present it with your financial documents. We cannot get a full approval from the bank because they do need a property in order to make it a final offer. But yes, because of the connections that we have, the banks will tell us straightforward so as well, like, no, this is not viable and this operation is not going to get an approval.
Okay. All right. So that's the process, and a great point, I think, to pause the recording. And thank you, Jacqueline, for an excellent session there and all the wonderful questions that came through from everybody in the chat as well. Superb. If you want to get in touch with Jacqueline, it's jm@mortgagedirectsl.com. Did I miss anything, Jacqueline? Last word to you.
No, thanks everyone for being so interactive and asking a lot of questions, good questions. I hope, it clarified some doubts people had on how it works to get a mortgage in Portugal.
Superb. Thank you very much.